Hey everyone, Love Joe from Market Makers University here, and in today's video, we're going to be talking about trend lines. Yes, this is one of the most foundational aspects when it comes to technical analysis, and what I've realized is a lot of traders do not draw these trend lines the correct way, and that's causing them to lose a lot more money in the markets than they should. And in today's video, I'm going to be showing you every single thing you need to know about these trend lines. I'm going to show you how to draw them, and most importantly, I'm going to show you the different ways that you can actually enter trades on these trend lines. And by the way, there are many different types of trend lines you can draw, but in today's video, we're going to focus on one of the most basic trend lines you can use in your trading today, because if you implement this stuff in your trading, you could dramatically increase your win rate right now. So if this is something that you're interested in, grab a pen and paper, take some notes, and I want you to sucker punch that like button right in the face while I roll the intro. Kind of like this guy.
Getting offline, guys. Later.
So before you draw any trend lines, there are a few key rules that you must understand. First and foremost, you have to understand that trend lines are simply guidelines of where the market might potentially be going. The next rule you have to understand is the fact that you need to understand which side of the actual market that you're going to be actually drawing these trend lines. So for example, if the market is going in an uptrend, you want to draw the trend lines. The most important trend lines are going to be towards the bottom of the price movement. If the market is going in a downtrend, if the market is trending downwards, the most important trend lines are going to be on the upper side of the actual market. So let me just go ahead and give you an example by just simply drawing some things out here on the TradingView program. So this right here, we're simply on TradingView, and I'm just going to give you an example. So let's just assume that the market is doing something like this, right? So this is an obvious downtrend. Now, whenever you draw a trend line in this market here, the most important trend line to draw in this case is going to be the trend line at the top area of the actual price movement. So you want to draw the trend line above the price if the market is moving in a downwards motion. Yes, you can definitely draw a trend line here as well, and you probably should, but the most important one, the one that you always want to keep an eye out on, is going to be this upper one here, since this is a downwards trend. This is a downtrend. Now, if the market is moving in an uptrend, the market is moving upwards, which side of the market would you want to draw your trend line? The most important trend line would be on the bottom side of it, right? You want to draw your most important trend line right here. And yes, you can also draw your trend line towards the top as well, but the most important trend line is going to be this one right here on the bottom. So just understand that if the market is moving in a downtrend, you want to essentially draw the ceiling. You want to draw the ceiling of the price movement. If the price is moving in an uptrend, you want to draw the floor, because you're anticipating, just like a bouncy ball, you're anticipating the market's going to bounce off the bottom line and continue to go in the uptrend. And the next rule that you must understand is the fact that you want to try to touch the outermost part of the price action, even like the tip-top areas of the actual wicks. And if it does cut through some of the wicks or some of the candles, you would also want to try to touch as many tops as possible. So in this case, we're touching this top, this top, this top, this top. You can see the price action actually went above it just a little bit, which is fine because you want to try to touch as many tops as possible. In this case, you want to try to touch as many bottoms as possible without going too far into the actual price action. So you can imagine these being wicks, and this being an area that the price just kind of barely missed. But as long as you touch most of the areas without going too far into the bodies, touching as many endpoints wicks as you possibly can, this is how you would draw the actual trend line in the case where the price is moving in the up direction. Now, the next rule that we need to kind of talk about is when to actually draw a trend line. So on this earth, in this world, In order to draw a line, how many points do we need to draw a line? We require on this earth, we need 2 points to draw an actual line. And that goes in the same case when it comes to drawing trend lines. Some of this information might be remedial for some of you, but you have to understand that 2 points are required to draw a trend line. So just going to give you an example, right? So if you see a high, and you see another high, and let's just say you see another high over here, this is enough information. This point, this top point here, and this top point here is enough information for you to finally start drawing a trend line. You want to draw a trend line as soon as you can recognize it. So as soon as you see 2 tops, 2 highs, you want to draw the trend line. So this way, as the market continues to move up and down, if it touches that trend line again, you already have your trend line prepared so you can take action and enter an actual trade. And then you're in hopes that the price will continue to go down off of that trend line. So now let's go ahead and put all these rules into action. So I'm just going to delete all of this stuff right here. Let's move to the actual chart. So currently we are looking at, what is it? We're looking at GBP AUD. So I'm just going to give you an example here. I'm going to go ahead and go to the actual replay mode. I'm going to go to right here, these 2 lows. So in this case, you'll notice that the market created a low, then it moved up, then it created a higher low. So you notice these are the 2 points. There's a point right here, and there's a point right here. These are the 2 points that the market created a low. This is enough information in order for us to actually draw a potential trend line. So let me just delete all of this stuff here again. And now we're just going to draw an actual trend line. So you would start the trend line at the tip top wick area of the actual price action. So a way you can kind of guarantee that you'll get the exact tip is to click on this little magnet tool that TradingView provides, which will just lock the cursor to the actual tip. Or what I like to do is you can just hold Control if you're a Windows user, or hold Mac if you're hold Command if you're a Mac user. Notice the cursor is just literally being glued onto the actual price action. So I'm going to go ahead and drop a line point right there. And the next one, I'm going to go ahead and draw it right over here. And now I'm actually going to make this thin, just so we can kind of see where the price action is. So this is a trend line actually drawn. So now as the market continues to move, what we're looking to do is, since the market created a higher low, we're looking for a buying opportunity. Where do we want to enter the buy? We want to enter the buy potentially if this price action, if the market ends up slowly creeping down to this trend line. If it does, we're going to go ahead and enter a potential buy. We're going to buy low to sell high. So as the price continues to move, we notice we have an entry right over here. This is where we would enter the trade. We would buy low. We would enter our long position. We would enter right over here, and we would go for the actual long. I'm not going to explain anything about take profits in this video. I did make another video about take profits. I'll link that right up here. So make sure you do watch that video as well. But this video is just solely explaining just entries. And you always want to make sure that you go ahead and keep extending the trend lines past where the current price action is. Why? Because we're going to be using this information to allow the price to bounce off of our line in the future. So another way you can kind of allow this to extend in the future is just double click the actual trend line, and you can click right over here where it says extend right line. So this just extend it all the way to infinity. So I'm going to hit OK on that just to kind of give you an example of that. And you'll notice that the price touched that same exact area again. What would we do? We would do the same exact thing as we did right down here. So we would enter another buy as soon as the price went ahead and hit that same exact trend line. So this would be another area to go long. And remember, the important trend line is the one at the bottom, because it's under the price action. We're allowing this to act as if it was a support. We are supporting the price continuing to go in the up direction. Remember, this is a floor because this market is going in the up direction. You could draw a trend line at the top. Just for example, you could draw this trend line right over here. But the reason it's not too important to draw that trend line for your entries is because you don't want to enter on the opposite direction of the trend movement. You notice this trend is moving in the up direction, so you really don't want to trade against the trend. You don't want to trade going in a short position, going downwards. You want to aim in the up direction because that is where the actual trend is going. Remember, trend is your friend. Now, will these trend lines work 100% of the time? Of course not. This is not going to work 100% of the time. Again, we're doing trading. What we're doing is we're taking calculated risks. We're looking for areas of opportunity where we can win more often than not. So of course, you're going to get some trades wrong, and that is completely okay. This is something that you must accept if you want to become a professional trader. If you cannot accept losses, you are not going to last long in this industry. I'm just being 100% straight up with you here. So let's assume that we try the same technique again, right? So we're going to enter on the same, for the same reason, we're going to enter on that same exact trend line that we had drawn. So let's go ahead and allow the market to play some more. Okay, so we would enter right over here. We have our entry made. So we've entered into the market. We put our stop loss under the trend line and our take profit wherever. It doesn't matter. So in this case, depending on where you put your stop loss, this trade could have just as easily hit your stop loss. If your stop loss was up here, you would automatically be out of the trade. You would have lost money on this trade. And another reason you could have potentially got out is if you saw that the price action broke past below the actual trend line, that could be a potential sign for you to actually get out of the actual trade. So there are a few things that you might have done on this trade that would have caused you to either make no money or even lose no money, just a break-even trade, or you could have lost money had that trade hit your stop loss. Now, at this point, you'll notice that the price action is cutting through let me delete this. You'll notice that the price action is cutting through the actual trend line. So what you would want to do is you would want to adjust the trend line to allow it to continue to touch the actual wicks. So if you look at this area here, you'll notice it touched this wick right here, this wick right here, this wick right here. It missed this wick, it touched this wick, and this wick is kind of piercing through it. This has the most touches where it's touching the most, as many wicks as you possibly can, yet still respecting the trend as best it possibly can. You would not want to draw the trend line like this because you're missing a lot of the price action. Instead, like this, you're touching most of the wicks, even though some are actually deviating a little bit. And as the price approaches that area again, you could enter your long position to go long. And you'll notice what'll happen here. You go long, and this trade, depending on where you take profit, it could have hit your take profit, or this trade could have just simply consolidated for a little bit. Now, here's the thing. You guys have to be aware of exactly what is going on in the market. One thing you'll notice is at this point where the market was before creating what's called higher highs, now the market is creating lower highs. The highs are getting lower and lower and lower. So now we need to think about starting to trade the other way. We need to understand that we should now possibly draw a trend line at the top, creating a ceiling, because we could be looking at a possible downtrend. So let me just go ahead and delete all of these little circles here. And we would draw the trend line touching the wicks. But you'll notice, let me just go ahead and take out this little extend line here. But you'll notice another high was created. So we would adjust this trend line to try to touch as many wicks as possible. And now what would we want to do? We would want to enter a short on the top of the trend line. We want to enter a short if the market goes up to the trend line. We want to enter a short aiming in the down direction. So let's go ahead and allow this market to actually play. And just to kind of save time, let me go ahead and go back into the actual daily time frame. This is the same exact market. This was that little trend line that I drew. So let's go in the daily time frame, just allow this to kind of go by a little bit quicker. And remember, you want to try to extend this line all the way into the future, right? So I'm just going to click this, extend this line to the right, and you'll notice the market created a high and then it rejected back down. Let's see if it kind of reaches that high. Okay, so it looks like this was a high. So we need to adjust this trend line again. We need to allow this trend line to touch this line right over here. So now at this point, it's touching all of these wicks. You could argue that you could enter a short there, but I feel like this trade would have been missed. So I'm just going to adjust this trend line to allow it to touch all of the tops, all of the highs, all of the points. And in this case, this is where the entry would have been. So you would have entered a short right here on this wick. So yes, in this case, we missed one trade, we missed another trade, we missed another trade just because the trend line wasn't on point accurate where the price ended up rejecting at. But we finally got the trend line aligned enough to where we can finally enter that short. So let me just go back to the 4-hour time frame to show you that this would have been the actual entry right over here to go short in the short direction. And looking at it, this would have been one hell of a trade. And you'll notice, looking at these little timelines at the bottom, you'll notice that we would have waited from November all the way till December, like a little bit in between December, to actually enter this trade. This would have just been 1 month of patiently waiting to enter this beautiful trade. And again, in the meantime, you could enter other trades for different reasons, different technical analysis, and you can even look at different currency pairs as well. But if you want to trade with high probability, you would patiently wait until the price gets to your sweet spot for you to enter these high probability trades. And again, this would have been one hell of a trade. You can notice this went down right here. It says 760 pips. Right over here, 760 pips. Now, I'm sure at this point, you guys got the hang of it. So I'm going to get out of the actual replay tool. I'm going to go ahead and go to the daily time frame and get out of the replay tool just so we can go to the current market today. So I just want you to look at, so just to kind of give you some couple more examples. As you see, this market is now trending in the up direction. Remember, we need 2 points to enter into a trend line, right? We need 2 points to draw a trend line. And if this market is going in the up direction, we would want to draw the trend line towards the bottom as the support or as the floor, right? So we get the 2 outermost edges, which is this low right here. This would have been a low right here. We could have created 1 point, 2 point, and when the market approached here, this could have been our area to go long to enter the trade going in the up direction and netting us around 360 pips. Or if not that, then we can look at the next area that is a low, which is this point right over here. So we connect the lowest point and the second lowest point. We have our 2 points to create our line. We would adjust the trend line. We have our 2 points, and then we could enter our long on the third time the price touches it. This probably would have been a missed trade. And this probably would have been the entry that you would have taken to go long to allow you to net quite a bit of pips. This would have been around a 600 pip trade. And just to show you a couple other examples on a couple other charts, we can go ahead and go into Euro USD. And one thing I want to explain to you guys is you can do this stuff in many different time frames. I made a video on multi-time frame analysis. So if you have not watched that video, I would recommend you watch the video on multi-time frame analysis. But I want to explain to you that right now I'm in the daily time frame. You can do this technique in many different time frames. You can do it in the daily time frame, 4 hour, or even the 1 hour. But I just want to give you an example. We are currently on the daily time frame. I'm not going to go into the replay tool. I'm just going to show you the first 2 touches to show you where the third touch is to take the trade to enter in the direction of the actual trend. Notice this area right here. We are trending in the up direction. We have our first low right here. we have our second low in this area over here. We have two lows. We find those two lows, and now we have enough information to draw the trend line. So the trend line would go something like this, and we would enter our trade on the third touch of that actual trend line. And remember, we are drawing our trend line towards the bottom of the price action. Why? Because the price is moving in the up direction. And as you can see, this same trend line has gotten respected right here. So this could have been another trade in the up direction as well. And I want you guys to understand, you need to pay attention to the tops and the lows. In this case, you'll notice that the market has created lower highs. So this would have been an area to draw trend lines at the top, going in the down direction to look for potential shorts. Now, to give you some other examples as well, let me go ahead and delete these trend lines, and let me get rid of this extend right line just to clean it up a little bit. But as you can see, we are currently on the daily time frame. So had you drawn a trend line here, this could have been an area for you to enter your trade from the first outermost touch to the next outermost touch. As these lines are connected, you could enter your trade on the third touch. Extend this to the right, you wait until the price touches it again for the third time, and there's your trade to go short, netting you quite a bit of pips. In this case, 447 pips. This is in the daily time frame. You can do the same concept in the 4-hour time frame. So let's just assume we've zoomed in. Let's assume that we're in now in the 4-hour time frame, connecting these two tops, connected to the top here and here. We could have entered another short on the third touch of that trend line right over here. And another example, let's actually go into the 4-hour time frame to make it a little bit more realistic and show you how these touches are in the 4-hour time frame. You look at these highs over here, you see one high area over here, you see another high area over here, you connect this area, you connect all of this area right here, and you would enter on the next time that the market touches that area up here, which is here. So this trade would have netted you around 200 pips. And the next time the market did that was simply right over here. You connect the tops, and you enter your trade on the third touch. Here's one, here's two, and you enter your trade on the third touch to go short. In this case, would have netted you around 315 pips. Now, let's go ahead and delete all of this stuff right here, and let's go ahead and show you a trade in the up direction. So let's go ahead and just delete all this stuff right here. Now, as we move on a little bit towards the current price action, you can notice that the price is going in the up direction. So in this case, you would want to draw your trend line connecting the two bottoms, and you would want to extend this trend line, and you can notice that you could have entered here or here or here or here or any of these different areas right over here. And you'll notice this same trend line has gotten respected, so you could have entered a long way over here back in April of 2021. So had you entered a long here, this could have been a trade netting you around 540 pips worth of profit. Now, just to give you a couple more examples, let's just do USD JPY, and you'll notice the same concept happens all over the market. It doesn't matter what time frame that you're looking at. So had you drawn a trend line here, you could have entered a short on any of these different areas right here in the down direction, drawing the actual trend line on the top side of the price action because the market is trending downwards. In this case, now the market is trending upwards. You would draw the trend line starting from the bottom, going in the up direction, being able to enter a long in any of these different areas right up here. So the most important takeaways that you need to understand are, you need how many points in order to create a trend line. You need 2 points. You need 2 points to create a line, and you would extend that line into the future to be able to look for a potential area to enter a trade. The next thing you need to understand is which direction of the actual market that you want to draw your line, because sure, in this case, we could have drawn this trend line right over here to enter a long, but you wouldn't want to enter a long. You would want to enter a short. Why? Because the market is trending in the down direction. You want to go with the flow. So whenever the market is trending in the up direction, you want to create a floor where the market will potentially bounce off of in the up direction. Whenever the market is going in the down direction, you want to create a ceiling where the market will bounce off of, continuing to go in the down direction. I've given you plenty of examples in this video. I encourage you to go back, look at all the different examples that I've given you, go back to the beginning of the video and understand the rules that I've explained to you so you can start drawing these trend lines the correct way. And if you can add more technical analysis confluences to these trend lines and use other techniques in conjunction with these trend lines, then your win rate will slowly start increasing higher and higher and higher and higher and higher. So I encourage you to add this tool to your arsenal so you can start implementing this and slowly start increasing your win rate. I wanted to give you many different examples so you can see this in action in many different market conditions, so you can use the same tool, use the same concept in your actual trading. So I hope this video was helpful. If it was, I encourage you to actually hit like on this video, comment down below if it was helpful. And if you guys aren't subscribed to the channel yet, like, what are you waiting for? I encourage you guys to subscribe to the channel because we release videos just like this on a weekly basis. So that is all for this video. I'll catch you guys in the next one. Take care, guys.